So in our last video, we talked about Hyperliquid as one of the few consensus plays at just around $31. We also mentioned that Bitcoin would stay stuck inside a choppy range. Since then, Hyperliquid has significantly outperformed the broader market and hit even $40 just a week ago. And at the time of filming this video, Bitcoin had done exactly what we expected. No real significant breakout, no clear confirmation that the bottom is fully in, and still within a very volatile range, trading with no clear trend. Now, while most people are still focused on whether the bottom is in for this crypto market, I think the bigger opportunity is understanding where capital is moving before the next narrative fully forms. So in this video, I want to break down where I think Bitcoin really goes next. As I've mentioned plenty of times on this channel, the objective is to not get caught up on who's right, calling the bottom or the top, but instead it's all about placing your bets during the best asymmetric windows of risk and reward opportunities to make calculated decisions based on the data. Afterwards, I'll be discussing the truth on what's really going on underneath the entire market within crypto, because even though price action has been rather boring, a lot of retail investors are not interested, this is actually the time where institutions are right now more interested, more excited than ever before. Look, if I've learned a thing over the last few years, it's that you want to follow smart money. And when smart money decides to lean in while everyone else is staying checked out, this is when you need to be paying much more attention. After that, I want to get into what I think could become one of the most important narratives in crypto right now. This is the area that I believe could help drive the next real liquidity wave that we need to see that true bull market form. After I share with you my prediction on how the next cycle will develop, I'll show you the best asymmetric opportunities that I see in the market currently, because I don't think the only answer here is to just blindly DCA into random coins. I think there are clear asymmetric plays that offer much better upside. And if you understand where the attention and capital and infrastructure are likely headed next, you're going to be able to capitalize on that move. Last but not least, towards the end of the video, I'm going to give a very important crypto update involving 1099 DA forms. For some odd reason, this is not something I've seen getting discussed on Twitter, on Instagram, on YouTube, but it's news that can impact anyone who's ever traded or invested into crypto. This means if you've ever even created a transaction within crypto and you get one of these 1099 DA forms and you don't know what to do about it, you could go through an IRS audit. Now, this is going to be a much longer video than usual, so make sure you stay tuned. I have different time chapters if you guys want to skip through any parts. And towards the very end of the video, I'll also be going over my words of wisdom. All right, so we got a lot to cover. Let's get started with the usual, and that's Bitcoin. Right now, the majority consensus in crypto is that Bitcoin is still headed for a Q4 2026 bottom somewhere within this $45,000 to $50,000 range. This was also the view that I shared in our most recent video, and based on the comments that I saw in that last upload, it seems like a lot of you guys actually agree. Now, a lot of that comes from the usual halving cycle logic and the belief that Bitcoin tends to follow a very familiar pattern where it bottoms later in the year and then it resets from there. That 4-year cycle theory also lines up with what a lot of active traders are doing. Most people are still sitting in majority cash and waiting for that final leg lower so that they can buy what they believe is the real bottom. Now, while we do have this one side of the argument that things are looking more bearish, we have another growing camp that thinks the bottom of the market has already been in. Right now, the bulls are arguing that Michael Saylor, who's one of the main reasons why the last market cycle where we saw Bitcoin break its all-time high has started to buy up crypto again. Now, this is where things get a bit more interesting, because this is where I think a lot of people don't really know what to do. You on one hand have the whole Q4 bottom crowd, which is leaning heavily towards the 4-year cycle and that it's going to pan out. You also, at the other hand, have the whole bottom is already in crowd, and now they're starting to get louder just because we saw Bitcoin rally a little bit a few weeks ago. So what I like to do, I like to take a step back. I like to look at both sides of the argument and just look at the data. So right now, what the data shows is that it's just simply too early to call the bottom. Yes, that bounce we had from $60,000 looked decent. Yes, Michael Saylor has been aggressively buying Bitcoin again. On top of that, we actually had some incredible news. SEC made it clear that some of the biggest altcoins aren't securities, instead they're commodities, and there are genuine structural reasons to feel a bit more optimistic here. Now, despite all of those bull points, my jungy senses, they have not been tingly, all right? I still do not think we have seen enough to be confident just yet. The key level that you want to eye as an investor and trader is $80,000. Until Bitcoin breaks above that area of interest and actually holds it, nothing in this moment looks constructive to me just yet. Now, the biggest news has been war. Before my last upload was up, I was speculating that we would enter a war with Iran. Professor Jiang, Professor Zheng, yes, maybe there's a conspiracy here. We might know a thing or two. Now, all you got to know about war is this. Historically, Bitcoin has responded to war news and geopolitical shocks all in the same way. You get a sharp reaction, you get some fear, and then a relatively quick recovery. When Russia invaded Ukraine, Bitcoin dropped hard, then it recovered. Israel-Hamas war began in 2023, same thing happened. When Iran struck Israel in 2024, we saw the same thing play out. It's usually a fast move down followed by a relatively fast bounce. So what makes this current setup right now feel a little different is that this isn't just a one-day shocker headline. The problem with this war is that it can go on for a lot longer than most people anticipate. Now, Trump's goal right now is to make sure that this war is over as soon as possible. It's for a variety of reasons. You have the pressure in the Strait of Hormuz, but you also have midterm elections coming up. A president who wants to get renominated in a few years doesn't want to be known as the guy who opened up a can of worms. Instead, President Trump wants to look at the whole Iran conflict as a big W. So at the time of filming this video, there are still certain things that have not been fully resolved. This resolution is what determines our bags as crypto investors. So here's one thing that you guys will get on this channel, which is I'm never going to waste your time. I'm just going to keep it real with you on what you got to focus on. And I do think it's a waste of time trying to speculate for days on whether the bottom is in and pretending like I know or you know what's going to happen next when you simply can't. The better thing to do, and what has worked for me historically in the past to make millions of dollars seasonally through the markets as a still what I'd consider a younger investor, is just waiting for momentum, being patient, understanding that cash reserves is key to surviving, and to know what key levels to observe so you know exactly what to do when certain things play out. So if I had to assign some rough probabilities, here's how I'd put it. Bull case, 20 to 25%. The bear case, 30 to 35%, and us just chopping, being within this range, and the market being indecisive, more towards 45 to 50%. So let's start out with the bull case. So for the bull case to really play out from here, you're gonna need a few important things to start breaking in the right direction. You're number one gonna need the geopolitical situation to calm down. You need oil to cool off. We're not gonna see crypto run when oil is above $100. After that, you're gonna need the Fed to have room to become more supportive and in line of a faster rate cut than we have currently expected. Combine those few elements with liquidity, with geopolitical risks. You also need the broader economy in the world to hold together well enough that risk assets can feel like they can run. So it's not just one reason why the bull market would turn on. It's a confluence of many different factors, and you need all of them to start strengthening each other at a time when liquidity begins to improve. As I mentioned earlier, $80,000 is the key level. If we see that and then we see the move towards $90,000 to $100,000, then I'd say the bull run happening sooner than later becomes a lot more realistic. If tailwinds start lining up after that, we get massive movements happening in the stock market. People for some reason are now just getting greedy. We get a massive stimulus. Then when we see Bitcoin moving towards $110,000 to $120,000, that's when I believe when altcoin season and crypto is starting to spice back up. Now let's talk about the possible bear case, because I do still think this is more likely than the bull case at the moment. This is because the bear case does not require everything to go wrong. The bear case just requires a couple important things to go wrong around the same time, and then the rest of the pressure can build pretty fast. If the war for some reason decides to escalate even further, if oil continues to stay elevated or inflation starts creeping back up and the Fed loses room to support the market, then I believe corrections are on the table. When we see corrections happening in the stock market, we are going to see crypto take another dip. All right, so you have the bull case, you have the bear case, but this is the scenario that I think a lot of people are still not paying enough attention to, and honestly, it might be the one that catches the most people off guard. This is the version where I actually think the market looks strong at first. Maybe we see Bitcoin start pushing higher. Sentiment gets better. People are convinced that the bottom was in when it wasn't. Social media gets bullish again. Everyone starts turning back on to X. We see our notifications going off on all these little meme coin apps we've downloaded in the last year. Leverage starts building back up. Market starts to feel fun, easy again. New beginners who are trading for the first time ever making 100x returns. And it's usually at that point, euphoria, Bitcoin's pushing higher, and then all of a sudden we have the flush. Now, if that rally happens before the macro picture is fully resolved, this can be the perfect bull trap. This here is the kind of setup that hurts the most because it punishes not just bulls, not just bears, but both sides. So this is where I just want to come back with the same mindset, right? Because if you're watching this and you're like, all right, Brian, so what is it? I need you to tell me what I need to do with my money right now. The TLDR is I need you to stay flexible. There is no clear trend. There is no direction for either bull or bear case. And when the market is showing instability, Bitcoin is bouncing up within $60,000, $70,000, $80,000 and it's just ranging. This is where the markets are unsure. It's a reflection of that in the price action of Bitcoin. And that does not mean you have to do the impossible of trying to time something that you cannot time. So where's the Jungie Tingles pulling towards? I admit myself to what I mentioned in my last upload 3 weeks ago, and that is the market is gonna continue to chop within this range. If we get a breakout and my conditions are not met, I'm going to be very skeptical at that time. Now, if what I think is actually true, where we're just going to continue to chop throughout this year, it's going to be extra volatile. This is the market where you need to practice patience and not just long something or make an impulsive move just because you get bored. Taking a step back, if you are an investor who's going to be in this market for the next 5 to 10 plus years, then all you do is ask yourself this one question. Do you believe that crypto is going to be higher in 5 to 10 years from now? Do you believe Bitcoin is going to be higher or lower in 5 to 10 years from where it's at today? Depending on your answer, you'll know whether you should be dollar cost averaging, investing, or if you just decide not to invest at all. My long-term thesis with crypto, as it has been for the many past years, is still the same. I believe we are going to see $1 million Bitcoin in our lifetime. I believe crypto is going to stay unless there is something that invalidates my thesis, like Satoshi Nakamoto really getting exposed and then dumping his whole bag. But even then, I think that would give another reason and a massive discount for people to buy it up even more. I think we're far past the point where this market is still in its infancy and people think that it can just die out. Instead, I believe the crypto market, it's going to get more and more efficient as time goes on. Bitcoin is only going to grow higher in its price. And it's where if you agree upon that, you can just dollar cost average, because it doesn't matter if you buy at $50,000, $60,000 or $70,000 when your price target of $250,000, $500K, or even $1 million in 10 years is your price horizon. So what's the move? What do you actually do? As I mentioned in my last video, and as I'll mention throughout this year, it just makes sense to dollar cost average into the markets. There have been studies where it shows someone trying to time the market barely outperformed individuals who just average in over time. The thing with averaging in, and the variable that most people don't account for, is that it's so much less stressful than you trying to constantly time this market. And by the way, unless you're a decent trader, like not a trader who's like trying and losing money year after year, unless you're a decent trader, play the easy game. Play what I do. You step into the ring when easy mode turns on, because you have the trend in your favor. You play heavily, you cash out, you don't get too greedy, and you wait for the next time that returns. Over the last 4 or 5 years of investing, I'd give it the probability of about 15-20% of the time you're in a market that trends strongly, you want to be participating then, and then the other 80% of the time, it's within a very volatile trading range. So just make sure that you have exposure you're building up. For your DCAs, you don't have to put in $1,000 a day. Most people can't afford to do that, but even just $100 a week, that can compound and add up to a lot for when markets do pick up. Because right now, even though Bitcoin is sitting at around $70,000, the asymmetric upside is there. By the time 2028 comes around and we see these price predictions of $250,000 hit, $250,000 is much farther away than $70,000 is away from $40,000 or $50,000. In life, it's all about taking risk, but the best investors, they take defined risk that are asymmetric in its upside. Otherwise, guys, if you're taking one-to-one risk reward trades all the time, or the upside is not as good as the downside that you can occur, which is pretty much losing your money to zero. But here, guys, I just want to emphasize so much. This is not the channel where, you can get rich quick every single time throughout the year. I wish that was the case, but that's not reality. Those pockets of opportunity come up sparingly. When they do come up, we cook. When they're not here, we're patient. All right, so now that we've covered the broader market, the frameworks that you guys need to know, let's talk about what I think is the biggest opportunity that's going to unravel to unleash the next bull market in this space. If anyone ever asks you what crypto needs for it to move and hit that next level, it's just liquidity. Liquidity comes in all forms. We've already talked about Michael Saylor buying up a bunch of Bitcoin. That's massive liquidity. Fed interest rate cuts, massive liquidity. Stock market going up and trickling down into crypto, that's liquidity. But stable coins is also an untapped market with over $300 billion and increased adoption happening every single day. So I was covering this with my research team the other day, and it's a great report by BVNK. So according to this study, 77% of people in the report said that they would open up a stablecoin wallet if their bank or fintech app offered one. So if you take a look at this graph on your screen, you can actually see just how big the stablecoin market is going to rival the world's largest payment networks in the world. A few weeks ago, MasterCard announced that they're coming out with the MasterCard Crypto Partner Program with 85 plus partners. You can see in this tweet here that MasterCard's doubling down on stablecoin infrastructure. They're acquiring BVNK Finance in a deal worth up to $1.8 billion. And you can just see the growing trend here that stablecoins are in becoming one of the core financial instruments of all the things that we use in our day-to-day life. It's not just MasterCard though, but Stripe, the $159 billion company, has also been betting big on this. Stripe recently acquired Bridge, which is a stablecoin orchestration platform, and it's the distribution layer and the infra layer that are converging all on the same rails. So Stripe's stablecoin volume actually doubled last year, while Bitcoin dropped 50%. Stripe also built Tempo, which is their own payments blockchain with Paradigm, and Bridge now has a federal banking license from the OCC and issues its own stablecoin called USDB. By the way, SpaceX was already using Bridge for global treasury management before Stripe even acquired them. These are some of the biggest companies in the world, privately owned, that are participating in this whole stablecoin adoption. On top of that, you also have Visa, who's expanding their partnership with Stripe and Bridge. And with that recent press article from the SEC clarifying that most crypto assets are not securities, we are now seeing further development during a time where sentiment for retail is at pretty much its lowest. I think this stat was fascinating. There's also a report that the US Treasury estimated and warned that up to $6.6 trillion in US bank deposits could be at risk of migrating over to stablecoins, especially if yield-bearing stablecoins became widely available. This also means that banks became widely available. So to take a step back, when we want to think about the growth and adoption of crypto, we have to think about what could bring the next wave of liquidity for all the users that are currently in crypto and currently still too skeptical and thinking crypto is a scary place, because yes, I agree it is. That still to me is stablecoins, which is very high on this list. It's something that I believe retail gets a lot of benefit from, because instead of earning less than 1% yield on your cash through some of these banks, you could be earning 3, 6% or even more through your stablecoins. Now, the problem here is that all those stablecoins I'd say is good for crypto. It's good for people because it cuts out the middleman. It ain't good for banks. And as most of y'all know, when you threaten the mafia, you could run into some trouble. If you guys remember a few years back, there were many people who were taking their withdrawals out of banks like First Republic Bank and some of these banks from Silicon Valley. Oftentimes, banks do not hold one-to-one of their own cash reserves because they know they have the government that they can rely on, but also it's within their business where they got to lend out their money for them to make money and make a profit. The problem right now with the whole banking world is that you have millions of employees, you have a bunch of brick and mortar stores that eat into the same yield that would get passed on to consumers. Now, I don't think bank accounts are ever going to disappear. They're going to work in conjunction with the growing future. But let's not dismiss all the new developments that we're seeing right now with AI. Let's not dismiss agents being created, and that the fact the next 5 to 10 years of our life is going to look completely different, and I'd argue a bigger technological change than we've ever seen in the history of mankind. Some of the biggest institutions and companies in the world are taking their next step in acquiring other fintech related businesses. Back in February, Mr. Beast acquired Step. This is a teen-focused banking app with 7 million users. MasterCard, Stripe, Visa, everyone is preparing for this next adoption that we're seeing. And to put everything in perspective, guys, stablecoin settled over $33 trillion in transaction volume in 2025, And Visa, they did half. They did $17.1 trillion. Now, it's not just the company acquisitions that are happening and the fact that adoption is growing, but we had the Genius Act that passed a year back, which gave stablecoins a much clearer path. Right now, the Clarity Act is still working its way through the system, but the key takeaway here is that the rules are getting clearer, the structure is also improving, and that makes it a lot easier for just bigger banks, institutions to participate in this next market of where crypto goes next. All right, so where's all this going to next? Well, AI. Stablecoin rails are going to be huge, especially as AI becomes more capable, more autonomous, and more integrated into commerce. We talked about this happening for the last year. This is the whole X402 protocol. We are going to live in a future very soon where if you're trying to buy something online like that little Lululemon set you've been eyeing, I believe we're going to see a future where AI agents are going to be assisting through a lot more of the process that humans normally did. My belief with AI is that anything that was more mechanical, took a lot more time for us, those things that can be automated will be automated. This is booking flights. It's super tedious, managing your 1,000 subscriptions because now everyone's got Hulu, Paramount, Netflix, Disney. You got to have like $100 worth of subscriptions to watch one thing you want to see, paying for software, interacting with APIs. So if AI keeps becoming a bigger interface for the internet, then stablecoin rails have a strong case to become one of the core payment layers underneath of it. So if you believe that AI is going to continue to grow as an industry, as a niche, it's not slowing down from here, then you have to accept the scenario that AI is going to need a more sustainable payment rail, and that right now, stablecoins are going to be its best infrastructure to support it. Now, the numbers are already actually backing this up. AI agents that exist currently have executed over 140 million on-chain transactions, generating more than $43 million in volume. Coinbase's X402 program alone has now processed over 50 million transactions. And they also launched agentic wallets not too long ago, which give AI agents the ability to hold, spend, earn, and trade crypto. Look, whenever the next bull run comes around, that season is going to look so different just because we have AI more integrated and developed than ever before. McKinsey projects that AI agents could mediate $3 to $5 trillion in global consumer commerce by 2030. So this isn't some random Asian dude, Professor Jung again, like speculating this. This is all data and stats that we're seeing backed up by some of the biggest companies in the world. All right, so if you see this whole vision lining up, what can you do about it? How do you make money? Because that's the real question at the end of the day. Well, X402 is owned by Coinbase. The left curve take is just invest into Coinbase, but I like to find some more asymmetric plays, things where we can make decent upside and try to find the next Palantir or the next Amazon. And although it gets harder and harder as these markets get bigger, I believe there are going to be many 10x, 20x, 100x runners in our lifetime. So guys, we've talked about Circle on this channel. I've talked about Circle within Kaizen, which is our private membership community, many times since they have IPO'd. At the time of filming this video, they're at $126. In the last month, they're up 107%. And if you bought Circle since it's bottomed out, you'd be up right around a 3x. Circle is one of the stablecoin companies and the only direct exposure plays that are on the stock market. I think this is going to continue to go up until there becomes some other relevant player. But right now, the trend is strong, at least on this. But this is something we talked about on this channel and on the community since they IPO'd late last year. Now, if you guys want to get access to some of these early reports before it even hits YouTube, if you want to get access to some of the research that me and my team are doing, be sure to check out Kaizen down below. We have a free version that anyone can join. You can get a little taste of it. We also give access to private market deal flow for any of our accredited investors. And if you guys want to have a chance of being a part of that during this time where things are chopping like crazy, check out the link down below. Aside from Circle, it still just comes down to making sure that you find high quality alts during this time and you just space out the firepower. Now, there are still a few asymmetric opportunity plays that I believe are going to run wild when market conditions pick back up. Now, just make sure that you are responsible with your own investment. Obviously, guys, I'm not an advisor out here, but I have a heart for my community, my people, and I just want to see as many people make money in the next 3 to 5 years while we're granted one of the biggest opportunities of our lifetime. Here's the next play that I'm watching currently with my team, and this is something that most people aren't expecting, but I think there is much higher upside here than if you were to DCA into most of the coins. I believe paying attention to some of these DAT treasury companies that fell off in the last cycle is going to be massive, and I also think you cannot dismiss what MicroStrategy and also STRC is doing in the next few months. In the previous cycle, we saw it being fueled by treasury plays, financial engineering, and increasingly aggressive Bitcoin accumulation. That's pretty much how that entire financial flywheel that some people call a Ponzi has been working within Michael Saylor's business, MicroStrategy. So you definitely want to pay attention to how MicroStrategy performs this year. In previous cycles, when Bitcoin has gone up, MicroStrategy has still outperformed Bitcoin. So yes, it is a leveraged play, but I'd say they share about the same level of risk. Now, this doesn't mean just stop your DCA into Bitcoin if you believe in Bitcoin for the future. Obviously, you can just keep it safe, and there is still an argument why someone may want to rather invest into Bitcoin over MicroStrategy. But for me as an investor who just wants to capture as much upside as possible, you cannot ignore these different stocks. With the creation of STRC, which pretty much gives you monthly yield consistently, people are saying that STRC is a good alternative to you having your money in the S&P. The reason is because the S&P 500 could still go down to volatility. If there's a market crash, if there's a missile that flies, boom, we're going to see markets go down. Another pandemic, boom, markets go down. STRC, on the other hand, it's trading more like a stable coin. They have financially engineered this to keep this at a relevant price. I believe Michael Saylor, he's going to be able to continue raising money, but this is definitely still one of those flywheels where you don't want to be overly exposed to. Make sure that regardless of what it is, crypto or a company like this, you always accept the risk, which is anything could go down to zero. Now, MicroStrategy, yes, it's worth looking out for, but I do think BMNR is what you should have on your radar. This is because the broader thesis is that treasury vehicles are going to become even more powerful public market expressions of the crypto trade. If the market starts rewarding these vehicles more, which we've seen happen at the end of our most recent cycle we had, you're not just looking at token upside anymore, but you're looking at how public equities are going to add even more crypto to their balance sheet. The treasury mechanics get better, they raise more money, and then that price just goes up even harder. Now, I'm going to make a whole separate video on why I think BMNR is actually one of the most insane asymmetric opportunities right now this cycle, but this video is already too long. I'm not going to go into it there. It's going to just have to be another separate upload. If you do want to watch that, let me know down below and have your notifications bell turn on. Now, when it comes to other altcoins, yes, things have still bottomed out, but until we're in a more defined trend, I actually don't really buy into low caps or even mid caps as aggressively until I see some of those key levels with Bitcoin get hit, as we've discussed. Now, it really just depends on what kind of exposure you already have and what your appetite is. But for me, I know that some of the best coins that are going to run hard the next cycle, they're not even out yet. They don't even exist in its current moment. So preserving capital still is number one. And to do that, before you even enter the world of investing, you got to make sure active income, passive income for your own finances is stable and it's flowing in well. All right, so last but not least, guys, we got to talk about the 1099 DA. This is huge. All right, so this is actually in an email from my accountant. He's actually one of the smartest crypto tax accountants that I know, but the 1099 DA is the new tax form that everyone on a centralized exchange is receiving this year to force tax compliance. Think along the lines, if you have a stock trading account at Schwab, they send you a 1099 for your gains and losses. Same thing here, except it doesn't do the work for you. They make it very hard where you have to track your proceeds, your basis, and none of that is transferred to the exchange. So you get one shot this year to file it correctly. Now that the IRS has your proceeds reported by every centralized exchange that you're on, if you are off by $1 or you check a box on a complicated 8949 form, it can trigger an audit. One of the audit forms that is surfacing asks for all of your past wallet addresses and centralized exchange accounts under penalty of perjury. So the best solution here is that you need to report all your income and your gains properly. Your proceeds must match your 1099 DAs. If you got an old accountant who doesn't know what they're doing, you're gonna wanna make sure you invest into the right person. You do not want your doggy with dookie hat coin to be the reason why you ended up getting audited and have to go through years worth of a process. So here's what you got to do. Use a crypto specific tax professional this year. If you don't have one, I have access to one. There are different softwares that you can use. You can use Awaken Tax. We're also partnered up with them. I'm an investor in that company. The founder of that, he does an incredible job. He's always active on X. And bro's just honestly just one of the hardest working people that I know. Now, if you do want a crypto tax company that has proprietary software and relationships where they also go through, help you make sure everything is set up properly, I have a partnership with them. If you want to check them out, be sure to join Kaizen down below. When you join Kaizen's Discord, you can open up a free ticket. When you open up a ticket, there's going to be a button that says crypto tax stuff. Open that up. You'll get access to Awaken Tax, and then you'll also get access to check out Crypto Tax Prep, guys. By using those links, you're also going to get a discount that I negotiated with them. You want to make sure you have this all squared away before the tax season ends, which is in a few weeks. All right, last but not least, words of wisdom. Ecclesiastes 11:2. Invest in 7 ventures, yes, in 8. You do not know what disaster may come upon the land. I know a lot of people right now are trying to force certainty in a market that still has a lot of moving pieces, but wisdom is not always about certainty. Sometimes you just have to take a step back and just prepare for what may come next. To me, this is patience. To me, it's having a diversified portfolio, staying clear-headed, making sure I'm exercising, I'm building what I can build right now, and I'm putting myself in a position where if we do get a bad outcome, it's not gonna wipe me out. This is why I keep coming back to the same mindset that I've been talking about in many of our videos. Continue to stay educated, continue to stay grounded, guys. So if you guys wanna be a part of a community during this time, be sure to join us inside of Kaizen. You guys can also follow me on all my other socials, Instagram, Twitter, and even TikTok. I'll be doing some of that these days. Thank you guys for watching today's episode. We got a lot more different kind of videos coming up. Super excited for that. But as always, have a blessed day.